Louis Gargour, then, Chief Investment Officer at LNG Capital. Jim Bianco is here with us at the wall as well. Louis, morning to you. Good to see you. Well, let's start with credit markets then and the opportunity therein, given that a lot of the action recently seems to have been in the equity space. Still good value in some credit? Where would you go?
Well, let's differentiate the credit markets. The credit markets are investment grade, high yield, and in special situations. I think investment grade, you have to be careful. I think that actually it looks like government bonds. If you get the curve steepening, you'll get taken along with that steepening. Credit markets, where you look at high yield and special situations, very interesting. The dislocations have created, if you will, cheaper assets in Europe than the States. And they're at the part of the cycle where funding is easy, where LBOs are happening, and where companies are deleveraging and improving credit metrics. So yes, I'm positive on that part of the cycle.
Issuance of corporate bonds is running at record paces, and in the U.S. we're starting to see the inklings of bad behavior, no covenants, light covenants, some of the things that were telltale signs of previous highs. Are you worried about that?
I am. I think you're starting to see LBOs as well. You're starting to see, as you say, covenant-like deals. Look, I think you've got to be selective. You know, like the equity markets, I wouldn't barge in and sell by the Dow or the S&P. I'd actually select the sectors and the companies, which is why you come to people like us to kind of do the work and select the right names. Generally speaking, though, what's also happening is you're getting refi of expensive debt by companies at lower levels, which is very good, because if companies got an IRR of 15%, their cost of funding goes from 8 to 6. You get 200 more basis points of gross margin.
And you said to be selective. What we're also seeing a lot of is the interest in ETFs, high-yield ETFs, investment-grade ETFs. You're buying an index there. You're just buying kind of everything. Are you exposing yourself to some of these bad deals when you do that?
I think so. I think, you know, you're buying JNK and some of the other ones. You're actually just buying the conglomerate market and not making a decision on idiot. Because the opportunities in the market are idiosyncratic. I mean, we've got three names we're going to talk about. One's Italian, one is Scandinavian, and one is UK, but one's in a difficult sector, one's in a difficult country, and one's in a great sector. So I think you pick the sectors and you pick the companies, as opposed to just saying, you don't want to throw a dartboard at the high yield market. You want to actually select the right sectors and the right companies.
Well, let's just throw these out there. Wind, Welltec, and Aston Martin, I mean, all look to be generating really quite strong yields at this point. But what's the challenge around the business?
So different reasons. Okay, so we'll take Wind. Wind is an Italian telecom company. However, why is it interesting? Well, it's owned by Vimpelcom, which is a $19 billion behemoth out of Russia. Wind is getting you a very attractive yield. It's likely to be consolidated on that balance sheet, and funding costs come down. So, you're getting almost 11% for the third biggest telecom, second biggest mobile operator in the country. Great yield, stable credit with a big brother. Welltec, oil services. They make the robots that go and turn off oil wells when they burn. So it's an interesting sector. There is a bidder, Schlumberger. So your yield is something like about 7.5. But if Schlumberger comes in and buys this company, which we think they will, your return on your investment is 15%. So you kind of 7% asset, 7.5 with 8% upside. And the third company, the opportunity there is, James Bond brand. Terrible delivery of the Vanquish. They really fell behind. Somebody's come in and bought about 25% of the company, which gives them the capital to develop the market and develop the model and bring the model to market, the capex. And there's a capex issue with Aston Martin. Now that they've actually sorted the capex issue, equity prices up, revenues are up 50%, 58%. So you got a turnaround situation with a potential upside catalyst, which is somebody intervening and saying, here's some capital. So sometimes capital fixes things.